Hello, I'm Linda Yueh, an economist and author of The Great Economist. Welcome to this video episode of the Intelligence Squared podcast. I'm delighted to be joined by Reeves Wiedeman, contributing editor at New York Magazine, to talk about his new book, Billion Dollar Loser, subtitled The Epic Rise and Spectacular Fall of Adam Newman and WeWork. So WeWork is a co-working office space company founded about a decade or so ago, and was the largest office tenant in New York City and second in London, next to only the UK government. Valued at $47 billion at its peak, it was the second most valuable private startup in America. It then had a failed IPO in 2019 that the New York Times described as, quote, an implosion unlike any other in the history of startups. So Reeves, let's talk about what happened to WeWork and its co-founder and CEO, Adam Newman. So you open the book with a quote about Adam Newman, and you quote his high school teacher who said, quote, either Adam will end up in jail or he'll become a millionaire.
Yeah.
So why did you open with that quote?
Well, we thought it was fitting because I think part of what's interesting about this story and what was interesting about it to me as I reported on the company was that all of the good things about WeWork, or not all, but a lot of the good things, and the reason it was successful stemmed from Adam Newman, as did a lot of the reasons it fell apart. And so it was interesting to find that kind of this personality that he had of someone who was so ambitious and you know, so charismatic and always, you know, going at 110%. Was there way back in high school, and everyone could kind of recognize that he was not going to be someone who, you know, just kind of disappeared into the ether. He was going to do something interesting, maybe a little crazy, maybe successful, maybe not. But whatever it was going to be interesting to watch what happened to Adam from there.
You're right that some employees of WeWork you spoke to compared Adam Newman to Steve Jobs. Both emanated a, quote, reality distortion field that convinced anyone within its radius that the impossible was not only plausible, but exactly what they were going to do. So in your acknowledgement, you thank WeWork employees and mention that many of them use the opportunity of your conversations as a free therapy session. So what were your impressions of the employees as they were in this reality distortion field? And how did you conduct the research for this book?
Yeah, well, there was kind of a shift for people. I think, you know, when a lot of employees got there in coming from, in some cases straight out of college, in other cases from kind of boring jobs elsewhere, they were really excited. And to hear Adam get up on stage and tell them, you know, we're not just renting out office space, we're changing the world, we're making a difference in people's lives every single day, was really inspiring to people. And I think some of them had never had a job before, didn't know what was kind of quote unquote normal at a company. And so, you know, when they found themselves working 80 hours a week, 90 hours a week, they could kind of justify it in their heads because of the way Adam talked about what they were doing. By the end of things, after the IPO had fell apart, as I started to talk to more and more people who had left the company, either willingly or unwillingly, they were sort of jaded, and often they talked about their experience as if WeWork was some kind of cult that they had kind of escaped from in a certain way that was exciting for a while, but eventually you sort of realize that you're working, your whole life is wrapped up in this company. All your friends are at the company, and you're sort of uncertain why you did this, especially given how things ended up.
Wow. So just say a bit about your research for the book. Thinking you write about in the book that you've talked to hundreds of employees.
Yeah, so I started reporting on the company back in the spring of 2019, back when things were sort of still flying high. The company was worth $47 billion. The IPO hadn't even been announced yet. And at that point, when I was just sort of writing a feature story for New York Magazine, we were just interested in the company because suddenly our office in Soho in New York was surrounded by half a dozen WeWorks, seemingly sort of overnight. So it was trying to kind of look at just how this company had grown so quickly, so fast. And as I started reporting then, again, back in the spring of 2019, it became clear that there were some unusual things about the company, and that all of them, as we talked about at the top, stemmed from Adam. And it was difficult to get people to talk about the company. And this is kind of the struggle of reporting about any of these kind of high-flying startups, is that on the way up, everyone on the inside is kind of incentivized to go along with things, even if the things that they're seeing give them pause, and that could be for one reason or another. One reason is that WeWork kind of cracked down on people a lot who did speak out, and the other was just that people thought they were going to get rich. If you were an executive at this company, or even a low-level employee, you were being told over and over again by Adam and others that we're going to go public one day. Your stock's going to make all this work that you did worth it. So it was hard early on to get people to talk. Once the IPO fell apart and that incentive kind of went away, and people were frankly kind of upset with Adam, it was much easier to get people to speak about their experiences. And that, as you said, I ended up talking to a few hundred people who worked at the company, both from the most junior ranks all the way to the most senior people within WeWork, as well as kind of the investors and the landlords and all the people who sort of circled around the company and dealt with Adam over the years.
So Reeves, say a bit more about what Adam Newman was like when you interviewed him for the book. You describe his office as having not just a private bathroom, but also a sauna.
Yeah, he had sort of a 2-room suite, kind of back in the corner. He had this kind of sauna and cold plunge tub that had been installed, and there was a certain irony to the whole thing. You know, the business of WeWork was squeezing people into these famous glass cubes that they had installed all over the world. It was squeezing people into smaller and smaller spaces, and here was Adam in kind of a pretty large office by any standard. You know, that being said, you could sort of recognize in meeting him kind of some of the reasons that people bought into what he was selling, whether that was investors or employees or whatever audience he was addressing. He was just the kind of person who is charismatic, who makes you kind of knows what you want to hear and makes you believe in kind of what he's selling. So that was one of his great skills, and I think, you know, even in just sort of a brief interaction with him, you can see how people were attracted to being around him.
And give us a sense of the New York real estate world where WeWork started. So you describe how Adam Newman and Jared Kushner, President Trump's son-in-law, who was also in real estate. So tell us how they resolved disputes. I think shots and arm wrestling might have been involved.
Yeah, well, yeah. New York real estate is, as real estate anywhere, has no shortage of colorful characters, and you know, yeah, both Adam and Jared Kushner were kind of young real estate guys in the city, coming out of the last financial crisis. Jared was trying to push his family business more and more into Manhattan. Adam was growing his business there. They were about the same age, and they connected. And WeWork did a few deals. With Kushner's properties, both in Brooklyn and Philadelphia, and as you mentioned, you know, they came up with a colorful way to kind of resolve one dispute, which was an arm wrestling match in Adam's office at WeWork headquarters in Lower Manhattan. Jared lost. Adam bragged about how he had done a lot of arm wrestling when he was in the Israeli Navy. Jared did object to the loss and demanded a rematch, but he lost that one as well. So WeWork won out on that deal.
Wow. Okay, so in a nutshell, how did WeWork grow so fast?
A few things, all of which stem from money, is sort of the easy answer. I mean, if you go back and look at the early days of the company, they were not the first people to invent the idea of flexible office space or co-working or the various things that they did. There were other operators already. What Adam had was, on the one hand, ambition. You know, a lot of people who run these companies are happy to have a few spaces in one city here or there, and content with that, and content with slow growth. Adam, from the very beginning, wanted to grow, and he had access to the capital necessary to do it. You know, this, as much as he would later often talk about the company as sort of a tech company, or at least a tech adjacent company, this was a real estate business, and to expand a real estate business, you need capital, you need investment just for the basic construction and operation of your spaces. So Adam was in kind of elite circles, or at least on the fringes of that in New York. His wife, Rebecca Paltrow, was Gwyneth Paltrow's cousin. So from the very early days, he had access to certain circles in New York that had money. He was able to sort of tap that to grow the company early on, and then from then on, he was very good at pitching to investors. And you know, some people like to just sort of suggest that there's some sort of con artist aspect to that, but the reality is it's a skill for any business person. And Adam was especially sort of adept at going to investors and convincing them that this was not just kind of a boring real estate business, but that this was a business that was going to disrupt the real estate world. And, you know, investors were obviously interested in that, given how big of a market potentially the commercial office space world was. They were willing to give him really kind of shocking amounts of money, escalating more and more over the years. And that was the crucial difference between WeWork and other companies in this industry, was Adam's ability to raise that money to then spend to expand the WeWork empire.
So I wanted to delve into this a bit. So let's
Sure.
start with WeWork's mission.
Mm-hmm.
So you write their mission was to elevate the world's consciousness.
Indeed.
Community was mentioned in their IPO filing document 150 times, you write,
Mm-hmm.
while office space appeared 9 times. So you quote
Right.
Adam Newman as saying that WeWork wasn't a real estate company. It was a tech-enabled physical social network. So this is a big part of the pitch, the rise, wasn't it?
Yeah, this was the pitch, that somehow, you know, Adam was attaching WeWork to sort of the other unicorns, the other billion-dollar companies in Silicon Valley, and trying to sort of say that WeWork was not just renting out space, that they were creating this social network. And you know, the elevating the world's consciousness idea came sort of later, and was sort of the grandest manifestation of Adam's vision, which again was to kind of, as he said many times, to change the world. And that was to change the world of real estate, but it was also to do much more of that. And I think the way that he talked about the company, while it could sound ridiculous, and I think towards the end it really came back to bite the company, it was kind of these grand notions that Adam was good at talking about that led people to buy into what he was selling.
So I think just to go into a bit, you know, shared office space, you know, what was the kind of offering
Mm-hmm.
that sort of was behind this ambition or this pitch of the We company?
Sure. The business is pretty simple. WeWork rents out a space in an office. They go in, they renovate it, they make it look cool with you know, these sort of glass cubes, these big open common spaces with free coffee and beer kegs and all of that. And then they rent out the individual offices. And if you're able to do that, if you're able to fill all those offices and you charge more than you're paying in rent, then you can make it a decent amount of money. And that's not a new business. There have been several over the years, including sort of most famously a company formerly known as Regus, now called IWG, that has been doing this for decades. they did a boring version of it. It was kind of, white walls and acoustic ceiling tiles and that sort of thing. WeWork offered a different kind of vision for that, a more modern vision of what the office would be, a more millennial friendly kind of vision of what the office would be. And so at its core, that was something that people wanted. They wanted community in their offices. They liked the design and they liked the flexibility. WeWork, if you wanted, you could rent your office month to month, which is pretty unusual in the real estate world, where you often are stuck with a 5 or 10 year or 20-year lease. So it was kind of those things that at its core WeWork offered, and for a long time it was what a lot of people wanted.
And then he had other businesses that he was also developing as well as part of this offering.
Yeah. So, and kind of from the beginning, he had been thinking about this and wanting to expand into other businesses. One of the first that they tried was We Live, and We Live was an apartment building. They eventually built two, one in Washington D.C. and one in New York City. That was sort of premised on the same idea. We're going to give you a small living space. These were tiny apartments, even by New York City standards. And then these big open common spaces, big kitchens, laundry room with a pool table, those kinds of things, on the idea that what people wanted was community in their spaces, that they wanted to know their neighbors and interact with them. And that's goes against a lot of received wisdom in the residential real estate world. People don't often voluntarily give up more personal, private space in their homes, but that was the idea, and then from there they kind of spooled it into starting a gym called Rise by We in New York City, and as well as an elementary school was kind of the last iteration of this, called We Grow, that was led by Rebecca Newman, Adam's wife, and was meant to be kind of fill in this sort of holistic world where someone could live at a We Live, go to work at a WeWork, and send their kids to a We Grow.
Speaking of his wife, Rebecca, you write that when Adam Newman was pitching this We Live concept, smaller personal space, more community space, what was her reply?
She was not interested in living in that environment. So even though they thought this would be a place where the wealthy people would want to live as much as college students looking for a dorm experience, Rebecca rejected that.
And what was Adam's response when you asked him about this mission, this very to elevate the world's consciousness and all of these ambitions? What did he say to you?
Well, it was a confusing conversation. The thing that I relayed to him was that when I mentioned the mission to people, as I was telling them about WeWork, people who didn't know that much about the company, and told them, and they may have known that it was kind of an office space company, and a cool office space company at that. And when I told them the mission was to elevate the world's consciousness, the most common response I got was, "What does that mean?" And so when I relayed that to Adam, he sort of got excited and said, "That's perfect. That's exactly what we want. We're starting the conversation about what it means to elevate the world's consciousness." And I think that it's indicative of the fact that early on, when the company was providing these great office spaces that people liked, and was talking about, build a life, not a living, making a better day at work for people, that was something that everyone could connect to, whether you were an employee or someone renting a space. And once it got to this notion of elevating the world's consciousness, which again sounds good and well, and like something that any of us would want to aspire to, it just felt really disconnected from the reality of what the company actually did.
And you mentioned money as a big driver in WeWork's rise. So private funders valued
Mhm.
WeWork as a billion-dollar company, a unicorn. I learned a new term from your book, a decacorn. If you're worth
Corn.
10 billion, you
Mm-hmm.
are a decacorn. So you quote a member of WeWork's finance team who said, the nature of private markets is that if 9 smart investors pass, it only takes one relatively dumber investor, and then suddenly we're valued at $16 billion. So just say a bit more about the role of private investors, specifically, I think SoftBank was one that played a pretty big role.
Yeah, I mean, WeWork's rise was fueled by private investors from all kinds of places. Their first investor was Benchmark Capital, a pretty one of the sort of blue chip Silicon Valley tech firms. They got money from a lot of New York institutions, J.P. Morgan, Goldman Sachs, and eventually SoftBank. And SoftBank was the biggest one. In 2017, they invested $4 billion into WeWork, and this was from the Vision Fund, which was a sort of $100 billion venture capital fund funded largely by the Saudi Arabian government. That SoftBank was going out and investing in companies that were by and large tech companies. It was meant to focus on artificial intelligence, is kind of what Masayoshi Son, the founder of SoftBank and one of the sort of the most famous people in kind of the business tech world, is what he saw as the future. He invested in WeWork, ostensibly on this notion of WeWork was going to figure out how to use technology to sort of disrupt the real estate world, but in large part, he, like many others, bought into Adam's vision of changing the world and creating this sort of globe-spanning real estate company that would be unlike any other that existed. And so, these venture capital firms are, their whole business model is kind of predicated on hitting home runs, on funding these companies that can become these sort of giant world-spanning corporations. And if that means that they fund 10 companies and 8 or 9 of them fall apart, but one of them becomes the next Amazon or Facebook or Google or Airbnb or Uber, then it's all worth it. So in a lot of ways, WeWork's rise was fueled by this group of people that were hoping, even if the numbers didn't totally make sense, that Adam could figure out how to turn WeWork into one of those kinds of companies.
And so SoftBank bet on WeWork and called it the next Alibaba that you write about. So Masayoshi Son, the head of the Vision Fund of SoftBank, was known for investing $20 million in China's Alibaba, this e-commerce platform, which is very similar to Amazon, and ended up with a stake worth more than $100 billion, $20 million to $100 billion in a unknown Chinese tech company. I mean, he thought big, didn't he? And this comes through in the book when you were writing about sort of his relationship with Adam Newman.
Yeah, that's what he did. Is he takes these kind of risky bets and then pushes companies to become bigger and bigger. We say in the book, he'd had this nickname from executives at Alibaba who called him Mr. 10 times, and they said every time we had a goal or an ambition, he would say, make it 10 times bigger. And that was the same message he delivered to WeWork and to Adam. You have 1,000 salespeople, have 10,000. You have 1 million, you have 100,000 members. Why don't you have 1 million members? All of those kinds of things. He was there to sort of push the company, and Adam was willing to sort of be a vessel for that and push the company to try to meet those goals.
You also write a great deal about the parties and the antics. So I read a lot about tequila shots and fire extinguishers. So just tell us a couple of stories.
Yeah, well, I'll tell the one you're sort of alluding to there, which is in 2016, WeWork was running out of cash, and they were trying to close another big investment round, and they had gone looking for money in China, and really had struggled to get interest, and the only investor who came through was a fund called Honey Capital. And the investors from Honey, including the founder of the firm, John Honey, were in New York, and Adam invited them to WeLive, the sort of apartment tower in Lower Manhattan, where a party was happening, and he told them to come by and check it out. They did. Adam took them up to the roof of the building, which was not a place he was supposed to go, but at that point he more or less owned the building, so he was going to do whatever he wanted. A WeWork employee brought up a tray of tequila shots, which was just a common sight at pretty much every WeWork event. Adam was a big fan of tequila and handed them out at all kinds of events. And then at this one in particular, he also brought a fire extinguisher. And after everyone gave a toast and took their shots, he sprayed the investors with the fire extinguisher. And it's a ridiculous story, and it sort of repeats itself in all kinds of ways. And I think on the one hand, obviously in hindsight, you can look at it as kind of this moment of excess, and there were so many in the company. But also on the way up, it was one of the things that people loved about WeWork. People loved living there, young, or working there rather, young people, loved going to a company that knew how to throw a good party. And we obviously now know that is problematic, but in this case, with the Honey investors, as one of the employees who was on the roof told me, we closed the deal next week. So, clearly, while this is not something most more conservative business people would do, it was part of the way Adam operated and part of the swagger that he had and that attracted people to him.
And part of that was the annual summer camp, wasn't it? Where all the employees go somewhere. So I found it really entertaining to read about the summer camps and the requirements for Adam Newman for his tent. Just tell us a bit about that.
Yeah, well, WeWork had this annual summer camp for the first 5 or 6 years. It was held at an actual summer camp outside of New York City. And it was essentially, ostensibly, it was a weekend corporate retreat. What it ended up being was a big party. They would invite big musical guests, and there was an open bar. And again, a lot of people who attended describe it as one of the most fun events they've had. By the end of it, by 2018, the event was costing the company tens of millions of dollars. And one employee sort of shared with me this 3.5 page long list of materials that the Newmans wanted for their sort of compound at summer camp. It was a long list of alcohol, of snacks. My favorite was that they needed to have at least 400 plastic shot glasses. Was my favorite item on the list. And I think eventually this became sort of galling to a lot of WeWork employees who were in tiny tents. They were sharing in the cold and in the rain, and Adam is kind of living in this kind of manse. So a lot of the talk about changing the world and making it a better place and elevating the world's consciousness sort of started to fall hollow or feel hollow when he's also doing things like this.
So let's discuss the fall of WeWork.
Sure.
So revenues were doubling every year, but expenses were growing even faster. And so that was one of the factors. And in fact, I might tie that into blitz scaling, a term that you write about, that in Silicon Valley, lightning growth and not being too worried about risk or cost. So that you can gain market share. And this was one of the kind of approaches, wasn't it, that kind of fueled the rise of WeWork?
Yeah, it was this sort of growth at all costs mentality, and that the idea was that in order to capture a market, you needed to go quickly before any of your other competitors could sort of catch up, and that if you become this giant company, you sort of become too big to fail. And this was a thing that an idea that was taking over a lot of tech companies, and where becoming a platform was the hot thing to do, and becoming a company that sort of took over any one of these industries. And so, Adam and WeWork adopted that mentality, at least, and sort of deployed it in growing WeWork. Of course, the problem was it's just much more expensive to build out an actual space than to build a piece of software. And so the blitzscaling WeWork was much more expensive than blitzscaling a sort of more traditional tech software company.
So you write by 2017, so sort of the last few years, one of his early investors, Benchmark, was increasingly worried. They had thought that WeWork was supposed to be $500 million in profit, but instead it was losing a billion in
Hmm.
2017. By 2018, WeWork was losing $2 billion and
Hmm.
raised $702 million in debt financing. And this is after obviously having raised a large amount of money from private investors.
Hmm.
The Financial Times that you write about describe their community adjusted EBITDA as perhaps the most infamous financial metric of a generation. So tell us about this modified measure of what we would normally take as an indicator of profitability.
Yeah, EBITDA is sort of a traditional way of companies sort of, thinking about and expressing whether they're making money. And it's in WeWork had sort of added on this phrase "community adjusted" to sort of as a way of kind of taking out certain costs that the company said would go away over time, marketing costs, construction design costs, and then also streamlining some of the costs of their leases. And there's a way in which that idea isn't totally ridiculous. I think some people certainly objected to the notion that those costs would just disappear. What was almost as equally galling was just the name of it, community adjusted. Nobody knew what that meant, and it felt just like kind of another example of the company um, taking this kind of high-minded language and almost trying to pull the wool over people's eyes and not let them see what it was they were doing, which was just cutting out some of their costs and instead kind of inflecting it with this sort of community focused language. So that was one of the reasons that sort of particularly turned off a lot of investors.
Mm. And yet at that point, SoftBank was considering putting in more.
Hmm.
And I think around that period, they were thinking about as much as $20 billion, which would have put WeWork's value at over a $40 billion. And when you were writing about it, you said that would actually double the value that SoftBank had put on the company just a year ago. And Adam
Hmm.
Newman would retain control. He would be worth $13 billion, making him one of the richest people in the world. But the Saudis and Abu Dhabi, who are partly the investors in SoftBank, balked at it. SoftBank's own
Hmm.
listing of its mobile phone arm tanked, so the deal was off. So WeWork needed more money, and that's why they planned to IPO in 2019. So just
Hmm.
describe this IPO and the race to do it before the end of last year when WeWork would have run out of money.
Yeah. Yeah, a lot of people, I think, on the outside of these companies look at IPOs as, this is this is my chance to get in on the next hot company that's going to fund my kids' college retirement. But in reality, IPOs are just companies need more money and they have to go to the public markets rather to look for it. And that was the case with WeWork, where they weren't going to get any more money from SoftBank. They were continuing to grow at this incredible rate. And to do that, they needed more money, and so that drove the impulse for WeWork to go public. Adam Newman had hopes to avoid it for a long time. Being a public company just requires more scrutiny and honestly, kind of some sort of suppressing of some of the grand ambitions that he had. So it was not something that he or the company sort of did willfully, but it was sort of a necessity by the end if the company was going to be able to continue growing the way that it hoped to.
So, as part of promoting this IPO, trying to get interest in it, you write that Adam
Hmm.
Newman struggled to explain why WeWork was different from another real estate leasing company, IWG, which is trading at a market capitalization of $4 billion and not the $47 billion valuation of WeWork. So,
Hmm.
just tell us about the failure of the IPO.
Yeah, I mean, a few things happened. On the one hand, people finally got a look at the numbers, and they saw how much money WeWork was losing. They saw that there was this feeling or this fear almost in the real estate world that WeWork had sort of figured something out that the rest of the real estate world hadn't. But when people looked at the numbers, it looked kind of like a normal sort of real estate business. And then when you took sort of the way that looked with kind of all of this sort of gobbledygook language that was attached to the company about elevating the world's consciousness, the IPO paperwork was filled with these kind of buzzwords and taglines about the energy of we, and then along with kind of some of the conflicts of interest that emerged, the way that Adam and his family were sort of profiting off of the company, gave this perception of just a sort of a perfect storm of problems. The numbers weren't good. No one could quite figure out what the company was or what it intended to be, and then it seemed to have all these problems sort of at the heart of it, and a lot of them stemming from Adam, I think, just gave investors pause. And in the public markets, these are just more cautious, more conservative investors than they are in the venture capital world, and they weren't willing to take a risk on the company.
So just say a bit more about the kind of conflicts of interest that that you write about, which is part of the issue with public investors sort of balking and then them basically having to pull the IPO.
Yeah, there were a few things. I mean, the biggest one was that Adam himself was the owner of several buildings that WeWork was leasing. So in that way, his own company was paying him rent. And when it comes time to negotiate the lease, who's gonna win out on that negotiation? And it was those kinds of things that just gave at least the perception of a company that did not have strong corporate governance. There was another case in which Adam had sold, had personally bought sort of trademarks, sort of these we-related trademarks that he then sold to the company for $5.9 million. And in some ways, these were like sort of accounting decisions, but in total, they kind of gave the perception of a company that was as much a family business as it was a company ready to be public.
You also wrote that Adam Newman sold millions of dollars worth of shares in 2017. And the question that you asked was, why cash out if there are greater riches ahead? So why did he do it?
Good question. I think that the obvious answer is that he wanted to cash out, and that he wanted at the time to have these hundreds of millions of dollars that he would otherwise have to be waiting for. I mean, the cynical view is did he actually believe that the company was going to be worth as much as the private investors were valuing? I think he did. I think he knew he was pulling some kind of trick, but and that this might not work out. But I think he also believed very strongly in the company and the fact that it was and a belief that it was going to become as big and as he and Masayoshi Son hoped it would be. But the Newmans at one point owned 7 homes, and we're spending close to $100 million on personal real estate alone. So you have to fund that in some way. And Adam, is not alone in startup founders sort of selling off some of their shares in order to live the lifestyle they want. But he certainly was more extravagant than most.
How did Adam Newman end up getting ousted from WeWork? And I think you write that SoftBank's Masayoshi Son said we created a monster. So they were part of the exit for Adam, weren't they?
Yeah, eventually, once things went sour with the IPO, it became clear to WeWork's backers and Adam's backers that a lot of the problems were tied up with him, and that it was going to be hard for the company to move forward. And so, and the company also needed money. So SoftBank came in with this kind of rescue package. Part of which was predicated on Adam stepping down as CEO, and it was clear that now the backer that he had once depended on was now saying that he was not the person most well equipped to lead the company forward, and he was kind of out of chips at that point. All of his money was at this point still tied up in the company. The last thing he wanted was to see it go down, and certainly in that moment, it felt like there was no other option but for Adam to step down.
So SoftBank has now been sued, haven't they? So there's a legal dispute going on right now. So what's happened to WeWork?
Yes, the exit package that SoftBank and Adam agreed to, this roughly $1 billion exit package, is now under dispute. There's the lawyers are involved. The SoftBank is claiming that WeWork itself sort of did not live up to various terms of the deal, and that is going to be adjudicated in the months ahead, and we'll see what happens. WeWork itself is trying to figure out how to be a commercial real estate company in the pandemic, which is a tricky proposition. You know, they have given up the dream of We Grow and We Live and all these other things, and are trying to focus on being a real estate company, and getting back to the core of kind of what the company does. The trouble, of course, is that the brand is a bit tarnished, and they're going to have to fix that. And then the other trouble is that right now, there are few things worse than being an office space operator, and they're trying to figure out, along with the rest of the commercial real estate world, how to get people to come back to offices and what that will look like.
So, what's next for Adam Newman? Have you followed that?
A few weeks ago, he invested in a new company. It's sort of a residential focused startup. He's made several investments over the course of this year. I don't suspect that he's going to go quietly into early retirement in his early 40s. He's the kind of person who worked very hard for everything else that's been said about him, and I think wants to make an impact, and it will just sort of remain to be seen what he decides to do. But I think he's the kind of person who people are going to be willing to take a chance on, whether it's investors, whether it's politics, as something he talked about. But I feel fairly confident that we will hear from Adam Newman again.
And finally, what is your biggest takeaway from the WeWork story?
I think as we looked at this story, I saw it as a story about the last decade in a number of ways, and the decade of the 2010s in kind of the startup world, and the fact that so much of the growth that existed in a decade of growth was these kinds of companies that grew very quickly. And some of them have obviously become very successful in crucial parts of our lives, and others have spent lots of money and been unable to figure out how to actually make things work while kind of warping these economies along the way. So I think as we sort of enter a new era, I'm eager to find out what lessons, if any, the sort of venture capital startup world learns from this. And I think one is just that, growth at all costs has its dangers, and growing in so many different directions at such speed can push a company to do things it isn't good at, can push a company to do things it's not equipped or prepared to take on. And it's going to be hard to tell future founders to be more humble in their ambitions, but I think having some amount of humility, even while trying to build a giant, fast-growing company, is going to be a necessary ingredient to long-term success.
Thank you very much. It's a great note to end on. So thank you very much to Reeves Wiedeman. And do pick up his new book, Billion Dollar Loser. It is a stimulating tale with lots of anecdotes. And who knew that co-working office space could be such a wild read? Thank you all for tuning in, for listening. For more podcasts, please go to intelligencesquared.com. And I'm Linda Yueh.